most people think investing is going to instantly change their life. They expect fast returns, excitement, and visible progress within weeks or months. But the reality is very different. What actually happens after you start investing is not just a financial change, but a mental and emotional transformation that unfolds slowly over time. And most beginners are never prepared for it. The truth is, investing doesn't just grow your money, it changes the way you think about money, time, risk, and patience. In fact, the biggest shift happens in your mindset long before your portfolio shows meaningful growth. This is why many people feel confused or discouraged in the beginning. They expect instant rewards, but what they get instead is a long-term process that tests their discipline. Before going deeper, make sure to like this video, subscribe to the channel, and turn on notifications so you don't miss content that can help you build real financial understanding. Now let's break down what actually happens after you start investing in detail. 1. You become hyper-aware of money flow. Once you start investing, you begin noticing where your money goes more carefully. Small expenses that you never cared about before suddenly feel important. You start thinking twice before spending because you now see money as something that could grow instead of something to simply spend. This awareness slowly improves your financial discipline. 2. You realize how emotional you are with money. Before investing, most people don't realize how emotional they are. But once your money is in the market, emotions like fear, excitement, and anxiety become very visible. You check prices too often. You worry when things go down. You feel overconfident when things go up. This phase teaches you that controlling emotions is more important than predicting outcomes. 3. You stop believing in fast wealth. After a few months of investing, the idea of quick money starts to lose its appeal. You begin to understand that real wealth does not come from shortcuts. It comes from time, consistency, and patience. This realization changes your mindset and makes you more skeptical of risky or unrealistic opportunities. 4. You understand the reality of slow growth. One of the biggest surprises is how slow growth feels in the beginning. Even if you are doing everything right, progress may seem small. This is where many people quit. But those who stay start to understand that wealth is not built in spikes, it is built in steady compounding over long periods. 5. You develop a long-term thinking habit. Investing forces you to think in years instead of days. You stop asking what will happen this week and start asking what will happen in 5 or 10 years. This shift in thinking affects not only your money but also your decisions in life, career, and personal goals. 6. You become more disciplined without realizing it. At first, you may invest out of excitement or curiosity, but over time it becomes a habit. You start investing regularly, even when you don't feel like it. This discipline slowly spreads into other areas of your life, making you more structured and consistent overall. 7. You start seeing money as a tool, not just income. Before investing, money feels like something you earn and spend. After investing, you start seeing it as a tool that can grow and create more money. This shift is powerful because it changes your entire relationship with wealth. You stop thinking only about earning and start thinking about building. 8. You experience doubt and second-guessing. Every investor goes through doubt. You start questioning whether you made the right decision. You compare your progress with others. You wonder if you should stop or change strategy. This mental phase is normal, but it teaches you how to stay patient during uncertainty. 9. You realize timing matters less than consistency. One of the most important lessons is that perfect timing is not necessary. People who wait for the perfect moment often never start. But those who start early and stay consistent usually perform better in the long run. Consistency quietly beats timing. 10. You learn that boring is actually good. Investing is not exciting most of the time. There are no daily wins or dramatic changes. And surprisingly, that is a good thing. Stability, slow growth, and predictability are signs of healthy investing. The more boring it feels, the more stable it usually is. 11. You stop chasing market noise. Over time, you become less reactive to news, hype, and short-term predictions. You stop making decisions based on emotions or headlines. Instead, you focus on your long-term plan and ignore unnecessary noise that distracts beginners. 12. You start respecting time more than money. One of the deepest changes is understanding that time is more powerful than money. Money can be lost and regained, but time cannot. Once you realize this, you stop wasting time on low-value decisions and start focusing on long-term growth. 13. You begin thinking like an owner, not a worker. Investing changes your identity. You stop thinking only like someone who earns a salary and start thinking like someone who owns assets. This shift changes how you view opportunities, risks, and financial decisions. 14. You understand that patience is a real skill. Before investing, patience feels like waiting. After investing, you realize patience is actually a skill. The ability to stay consistent while nothing dramatic is happening becomes one of the most important financial advantages. 15. You realize most people quit too early. Perhaps the biggest realization is that most people never stick around long enough to see results. They expect quick success and leave before compounding even starts working. Investors who stay long enough eventually benefit from the efforts others abandoned. In conclusion, what actually happens after you start investing is not instant wealth, but a complete shift in mindset, behavior, and financial awareness. You become more disciplined, more patient, and more focused on long-term thinking. The real reward is not just money growth, but personal transformation. You start to see money differently, not as something to spend quickly, but as something that can grow and work for you over time. As you continue this journey, you begin to notice that your decisions become more intentional. You avoid unnecessary spending, think more carefully before making financial choices, and start prioritizing stability over impulse. Even your relationship with risk changes, you become more calculated and less emotional. Over time, these small changes reshape your entire financial behavior in a positive direction. If you continue long enough, investing stops feeling like a strategy and starts becoming a lifestyle. It becomes part of how you think and live every day, not just something you do occasionally. And that is when financial growth becomes not just possible, but natural. At that point, you are no longer chasing wealth, you are building it quietly in the background through consistency and time. If this video helped you understand investing better, make sure to like it, subscribe to the channel, and comment below what surprised you most after starting your investment journey.